It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. It's Wednesday evening, March the 30th, 2016. Last few drops of this month of March. We have another exciting nightly newsletter in store for you guys and gals tonight. We got crude, S&P, gold, and euro on the list for this evening. Markets continue to see increased volatility this week as the month of March comes to an end. Remember, this time of the year, we see lower volume, higher volatility, end of the month, end of the quarter. We're expecting to see this volatility. We talked about that earlier on this week. Yesterday's announcement from Janet Yellen pretty much put the kibosh to any interest rate hikes until June, right? So that's got the markets kind of sending prices higher here. We'll see if tomorrow continues. And Friday's jobs report is right around the corner and expected to be another stellar report for the U.S. economy. That's coming on Friday morning. Got a lot of reasons why these markets are volatile right now. It's great to be a day trader right now. Boy, oh boy. Excellent volatility, great opportunities today. Hope you guys had a great session. If you're with us in the trade room, we had another great session today with all of our students. Tonight, though, very important newsletter. We're getting ready ahead of non-farms on Friday. Crude oil is bearish with a spike in channel this evening. This tells us the most reliable trades will come after a correction back to resistance levels overhead. The E-mini S&P is also bearish after 2 days of aggressive buying, and we see a new bear channel, which tells us to expect rotation back to the low of day. Finally going to get that pullback on the E-mini. And of course, gold is bearish with a strong move lower today, but we have 2 legs down off the highs. We'll be looking for a short-term correction higher for the most reliable trades tomorrow. And of course, the euro is bullish after testing key support this evening, but there's a recent bear channel trying to drag this euro price lower. The buyers need to hold this pullback or that market's going to collapse all the way back to the low of today's session. Got a great plan for you guys. Lots of learning and earning opportunities coming here tonight on the newsletter. Before we get into our charts tonight, though, I do want to remind you to make sure that you're watching this video on our trading blog. The only place to find the full-length version of this newsletter is over here at sidewaysmarkets.com. If you're watching the video right now on our YouTube channel, don't forget to subscribe to the YouTube channel, but then go into the description of the YouTube video and you'll find a link, and that link will take you directly to this blog post. That way you can watch the full-length video. While you're watching the full-length video, don't forget to grab a free pass and come out and join me as a guest in my trade room in the upper left-hand corner. In the lower left-hand corner, you can register as a member of our newsletter mailing list. I'll send you an email every evening between 7 o'clock and 8 o'clock Eastern Time when this nightly newsletter is ready to be watched. Right below the video tonight, you can download all the charts in my video tonight. You can download all those charts and have them ready on your computer for tomorrow. And then, of course, over here on the right-hand side, you can join as a trial member here at School of Trade. Our trial membership, not the same as your free pass. As a part of our free trial, you'll learn about what it means to be a student, our strategies, the markets we trade, how we trade them, et cetera, et cetera. And don't forget, guys, no question too big or too small. We always have someone standing by 24/7, 365 to give you guys a hand. Love helping new traders get their careers started on the right track, whether it be computers, brokers, charts, data, execution, you name it. We got someone to help you guys out on the live support on the right-hand side. You ready to rock and roll? We got 2 more newsletters tonight and tomorrow night. Non-farms on Friday. Get a big end of the week here. And of course, tomorrow is the last day of the month of March. Always very important to remember as we go into the end of the day, the end of the week, the end of the month, the end of the quarter, we see volume decrease and we see risk-taking increase. At the end of the first quarter, a lot of big fund managers, they're trying to manipulate their portfolio to impress their clients, right, or dig themselves out of holes. A lot of times at the end of the month, we see traders take big risks. They're either trading with quote-unquote house money, right, or they're trying to dig themselves out of a hole, right? So we know to expect increased volatility. It's important over the next 24 hours. We trade conservatively, follow that plan, and if you don't have a trading plan that you can rely on, what are you waiting for? Come out and join me as a student. I'll give you the entire trading plan, and we'll trade it every day together in our live trade room, which opens up at 8 a.m. Eastern Time. Now, tomorrow morning's news, the last day of the month of March. We got jobless claims at 8:30. We got Chicago PMI at 9:45. Note about tomorrow, afternoon will be very low volume tomorrow because we've got the employment number right around the corner on Friday morning. The Thursday before non-farm Friday, tomorrow morning should be no problem at all, but tomorrow afternoon, just be aware the big traders in the market are not going to have any open positions going into that big news report. So you're not going to see anybody adding to their positions on Thursday afternoon. You're more than welcome to keep an open position on Thursday afternoon. Just be careful though, it's going to dry up pretty fast as traders go flat ahead of the employment number on Friday morning. We're going to talk more about that employment number tomorrow afternoon in the nightly newsletter, so make sure you come back and join me for the Thursday edition of our nightly newsletter. Now, starting off with crude, we're going S&P, gold, and we'll finish up with the euro this evening. Crude is bearish with a spiking channel this evening, which tells us the most reliable trades will come after a correction back to resistance levels overhead. The spiking channel tells us to sell the highs of the channel for the first two tests of the highs in the channel. We got the first test already. We got one more shot, assuming we get good rotation. And then also the spiking channel tells us to look for a correction back to resistance zone above the channel for a final opportunity back down again. Spiking channel, spike down, channel out, right? Spiking channels, all channels tell us the first two rotation tests are going to be the most reliable. That third rotation test, or if the second one fails, we've already got the first rotation test right now, right? The third rotation will be the least reliable. So of course we've got the first, right, second, and then we're looking for the correction back up into that correction zone. Conservative traders, when they see a spike in channel, they're waiting for that price to get back up to the base of that channel all the way to the beginning, right, of that channel, the first swing. That's your correction zone from that 38.91 to 38.73. So once again, spike in channel, we're looking for the first two tests of the high of the channel for the most reliable trading opportunities. If you're a student of mine, you know exactly what I'm talking about. And then of course, beware the third test. That'll be the least reliable, and of course, fourth and fifth will be even less reliable, and we want to wait for price to trap high, right? We'll find a resistance area overhead. I can add that in now after the markets have opened up. Most important thing to remember about a spiking channel is we're looking for price to go up, and then if you listen to my newsletter last night, failure into strength, into pullbacks, and then back to, right, back down to that low. Spiking channels are very important. We're looking for corrections back to resistance areas overhead. It's very difficult for me to tell you how far that correction is going to go, right? We have a news candle from today's inventory report. It may go as far as that level at 39.17. That would be my line in the sand for this to be considered a bearish market. If we can break and hold above 39.17, I would imagine this turns into a bullish market. It is going to be pretty obvious by then. The reality, though, is with that spike in channel, first two tests, we got the first one already. The second one, don't forget about rotation, right? We don't just sell the high blindly. We always use channel rotation. I'll teach you guys more about that in the intermediate course here at School of Trade. And then again, the real ideal area here is to use these areas of resistance overhead. I've got it marked up pretty clearly here. Up to resistance, buyer failure, into strength. Strength leads to continuations. Continuations lead to a retest back at that low. We also have a triple down support area here at 37.81 coming off that range overnight, a triple down off the range overnight. And then if this turns into being a bloodbath tomorrow, we've got the 37.5 and 37.10. If you look left, those are prior range support areas, right? That'll be used for targets if this turns into a runaway. One last thing here about a spiking channel. Spike down. First two tests, correction back higher, and then of course a big A, B, C, D, right? We're going to want to measure that out, and that's going to be your runaway target, right, for Friday's session. All right, guys, if this does turn into a sell-off here after that correction, right? AB equals C. It's pretty much standard operating procedure for a spiking channel. And again, if you're a member of mine, make sure you log into your intermediate course and learn more about how to trade those spiking channels and, of course, channel rotation. Moving forward here right now from the crude over to the S&P 500. We got a spiking channel here. We're bearish after 2 days of aggressive buying, and we see a new bear channel, which tells us to expect rotation back to the lows of the day. The spiking channel at the beginning of the day is failing, which tells us there's a big old bullseye back at today's lows. Spike and channel started the day today. Another spike and channel. We got the correction, as you can see here, the correction back to the correction zone, right? Try to take it higher, and it's failing. This is a great example of what happens when a spike and channel fails, right? Bull spike and channel, exactly the same situation we're seeing, but the opposite on crude, right? Crude's a bearish spike and channel. And so we're looking for the first two, 1 and 2, right, on that channel. And of course, the third one, wait for the correction. Where should the correction go? It's going to go between that, right, that first swing low and the base of that channel, right? This is your correction zone. And it appears that those bulls were unable to hold that pullback, right, and send that price back to the high. That spike and channel now is failing. What happens if a spike and channel fails? It's going to go all the way back to the beginning of the spike, right? That's our failure target. And right about now, if these buyers can't put something together fast, there's going to be a big bullseye on that 46 3/4, right? And it will probably be a pretty easy job for those sellers, because when these spike and channels fail, everybody sees it and they bail on these trades. Okay? The bear minor channel has recently broken, and the buyers failed to hold the pullback, which tells us the sellers are gunning for 51.50, and the new bear major channel is rotating off the highs with the, of course, the target being back to low. Two more channels here. We have a bear minor, right? Market inertia. Buyers try to hold it. They can't. Sellers are gunning for that 51.5, right? That bear minor has a break, and they're going to try to retest that low, 51.5. Nice and easy there. And then, of course, we have the bear major channel rotation, going from the high up to, or low to high, high to low, low to high, right, high to low, and expecting to see this price finish that rotation back down. So when you put all the pieces together, a failed spike and channel tells us the target is back at the base of the channel. We've got the bear micro or bear minor, right? Market inertia tells us price is going to try to revisit those lows. And of course, we are inside of a bear major, and we're looking to rotate from the low to the high, high to low, low to the high, and then back down to the low. We can also see here we have a measured move waiting to be achieved here right now. A to B, B back up to C, and C down to D, and that just happens to line up with the low of day from today, which will be the previous low of day tomorrow, and of course the base of that spike and channel. As you can see here, the buyers definitely had a shot here, new higher high, but they couldn't hold that pullback. That's the biggest clue. The only thing they have standing in the way right now is this rise.